Have you ever wondered how governments decide who should pay more tax and who should pay less? It might seem random or even unfair at times, but there's actually a core principle behind it called ability to pay taxation. Ability to pay taxation is a simple idea. It means that people should pay taxes based on how much they can afford. In other words, the more money you earn or the more wealth you have, the more tax you should contribute. And if you earn less, you should pay less. Now, this principle is built on a basic sense of fairness. Think about it like this: if two people are asked to contribute £1,000, that amount will affect them very differently. For someone earning £20,000 a year, that's a huge burden. But for someone earning £200,000 a year, it's much easier to handle. So instead of charging everyone the same amount, the system adjusts based on financial strength. This is why many countries use what's called a progressive tax system. That means tax rates increase as your income increases. So someone earning more doesn't just pay more in total, they often pay a higher percentage as well. Let's break that down with a simple example. Imagine one person earns £25,000 a year and pays 10% in tax. That's £2,500. Another person earns £100,000 and pays 30%. That's £30,000. The second person pays both more money and a higher percentage because they have a greater ability to pay. The goal here isn't just to collect money, it's also to reduce inequality and make the system feel fairer across society. Governments use this approach to fund public services like healthcare, education, infrastructure, and welfare programs. But here's where things get interesting. Not everyone agrees on how far this idea should go. Some people argue that high earners are taxed too heavily and that it discourages hard work or investment. Others believe the wealthy should contribute even more to support those with fewer resources. Another important point is that ability to pay taxation doesn't only apply to income, it can also apply to wealth, property, or even inheritance. The idea stays the same. Those with greater financial capacity should contribute more. Now, a common misunderstanding is thinking this system is perfectly fair to everyone. In reality, defining ability isn't always straightforward. Should it be based only on income? What about debt, family responsibilities, or cost of living? These factors can make the system more complex than it first appears. So, what's the key takeaway? Ability to pay taxation is a principle that says taxes should be based on what you can afford. The more financial resources you have, the more you're expected to contribute. It's designed to create a fairer system. But like most things in economics, how it's applied is always up for debate. And once you understand that, you'll start to see this principle behind many tax systems around the world.